Hello and welcome to another update video about SEI. So the SEI chart is cooperating very nicely with our primary scenario here. As I mentioned yesterday and also in the last few days, I'm leaning towards the white count, the white scenario until support levels break. Yesterday, the price was just, I think, starting another move up when I made the video, and I highlighted that I'm leaning towards the white count until we see a break below that B wave low at 66 cents, right? So this setup worked out nicely. We have two scenarios, of course. One is short-term bullish, one is short-term bearish. And recently I made a live stream, a member live stream, about how do you deal with alternative scenarios, because there always have to be two at least, yeah? Especially people who are new to Elliott wave sometimes struggle with that concept of alternative wave counts. They see it as a weakness or confusing, even though this is actually one of the really simple charts. Yeah, and I will explain why. But if you're struggling with that, I mean, feel free to check out the membership. I mean, it's not really to lure you into the membership. You know, honestly, we want people to learn, and the fees are basically, it's free anyway, right? Well, it's not free, but it's like, you know, it's ridiculous price. Anyway. You can learn there how to deal also mentally with alternative wave counts, because it's very simple. But I will still explain it to you here in a very simple form. It was like a 30-minute topic in one of our live streams. But in a very simple form, we have a bullish scenario here. The orange zone represents potential accumulation. I mean, I cannot tell you to do it. You know, I'm not your financial advisor, but I can share with you in which area the price, if the assumption is correct, that this is a wave 4, the price should turn around. Now, we've seen a reaction to that support zone twice. Of course, you never really know if the reversal has already happened. So there has to be a bullish pathway. And until that is really confirmed, we also have to have a short-term bearish one. That is not bearish overall. However, it just highlights the risk we might dip back into the support area. And there's usually a level that distinguishes between the two. And that is really the level that is very helpful for trading. And until yesterday, that level was at around 66 cents. So the further away we move from that level, the more risky it gets, you could say, because it takes a stronger move to confirm that short-term bearish scenario. So whenever you are in profit, you have to ask yourself constantly, it's always about reward and risk, right? You have to ask yourself, okay, am I happy to take that potential drawdown, to take, give up my profits if I entered in this orange support zone, which essentially it's for, do I give up my, do I accept that drawdown and then stop out below that level? Or do I just take some partial profits along the way? Those are personal decisions then. But overall, it's a really favorable situation to be in if we have two scenarios and both are bullish, which this is, right? It's just that one of them take us back into the support zone, but they are both bullish. Okay, they both point to the upside, and that typically should give confidence into a scenario, into the current trend. Essentially, the Elliott wave structures are there to tell us about the trend and when the trend breaks. Okay, just mention it because occasionally, very occasionally, I get comments about how confusing it is, and then it's about up or down. It's not about up or down. When you think trading is about up or down, then you need to do a bit of research, learn a bit more, because there is much more to it, and the markets are much more complex than up or down. It's all about reward and risk, really, not about up or down. But also mention it, and just mention again, if you want to learn, feel free to, even if you just try it for a month, I mean, check out the membership. There's so much learning content. It will keep you busy for weeks and maybe even months. So just because I want to help people understand how this works. Now, it's interesting because it might be forming something that looks a bit like an inverse head and shoulders pattern. Now, it's not really an inverse head and shoulders. Some people say they are only reversal patterns. Well, they can be continuation patterns as well. The thing is, if we have an inverse head and shoulders, it should really just be like one head. You have two heads, okay? But so I'm not sure, but looks a bit like a double bottom down there. It's not really a double bottom because it's not really the same level. So, but anyway, possible reversal is performing well. It's moving in line with the bullish forecast for SEI. It's an impulsive structure. That's why we're covering it, okay? Sometimes people ask me, why do you not cover more coins? I mean, honestly, we already cover more coins than anyone else I know anyway. but I have to be picky. We don't want to cover trash. We want to cover the coins that show impulsive potential, which SEI does, okay? So SEI shows an impulsive structure, so it's easier to trade than other coins. You know, a lot of people ask me about, I don't know, what is it, Arbitrum, SUI, but yeah, I do give updates, but it's much more helpful for the folks out there to focus on what's clear. And the SEI chart, because it's potentially impulsive, is clearer than many other charts. Yeah, we don't have many impulses in crypto, but when I see an impulsive chart, I focus on it. So yeah, and basically now the assumption is that the white count is here unfolding. 1, 2, 3, 4, 5. The third wave has reached basically the minimum target and also nearly my first ideal target. Those levels haven't changed in weeks, I think, or at least in 1 or 2 weeks. So it's obviously here the targets for the third wave in white. And 1 second. The third wave is likely an ABC structure, and the third wave should ideally reach 87.5 cents plus. Okay, so this is the first ideal level, and I think we should get there. It's also where we have previous highs. So if we get a pullback, it would be wave 4. Once I have confirmation for a pullback, I will add a support area for the chart for wave 4. That level would be at the moment, I mean, the range would be at the moment between 67.9 cents and yeah, 74.6. That's currently the range. But if the price goes higher, the support area would be a little higher. I can actually leave it on the chart already, but it will still move a bit. It will still move a bit. This would be the support area for the fourth wave, obviously. Okay, that means, in other words, if we see a break below that area, it will suggest that we are heading back down into the larger orange box. Yeah. And then as long as we're holding that smaller zone there, we should see wave 5 unfold, wave 5 of 1 to possibly $1 plus. Okay, but this is at the same time where it can fail after 3 waves in a B wave. A, B, C. And yeah, but overall, we give it the benefit of the doubt. Typically, after a breakout, we give it the benefit of the doubt and just, you know, go with the trend. And even if the microstructure breaks in the white count, it doesn't mean the overall bullish assumption changes. In addition to that, I have to highlight it's still a chart with a limited chart history, so the predictive qualities of Elliott wave are limited here. But we can still use those levels that we get from the analysis. That's my update about SEI. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.